Welcome traders. In this video, I'm about to tell you guys the basic stuff that you have to know when it comes to imbalance or fair value gap in the forex market. It is very simple. As we all know, fair value gap or imbalance is a formation between three candles. Let's take this candle for example. The A candle, the B candle, and then the C candle. When the low of C candle and the high of A candle does not overlap, the middle is called an imbalance or fair value gap. And this type of price action over here is known as unhealthy price action. It is not healthy. For price to move to its destination, price have to move in a form like this, a healthy price action. The low of Z candle have to overlap with X candle. Then we know price is balancing each and every price before moving to the upside. But when something like this happens, it is not balanced. So we anticipate price to come one day, depending on the time frame, to come and mitigate that area before moving to the upside. I hope you all understood this. That's what we anticipate price to do, because we want price to balance each and every price before moving to its destination. When price is moving to the upside, price have to come back, mitigate all imbalances before moving to the upside. I hope you get it right. When something like this happen, we all look at it in a different ways. People look to take entry here. People want price to come here and show confirmation before they enter trade. Let's go to different one, and I will show you later in this video how you can use this in a day-to-day trading. Let's move to this one. You can see this one is being mitigated. The A candle, the B candle, the C candle, the low of the C and the high of the A does not overlap, so that's an imbalance. Price came into it, mitigate that area before moving to the upside. This price action over here is unhealthy, but price came back, make it a healthy price action before moving to its destination. Look at what happened. The X, Y, Z candles. The low of the Z and then the high of the X does not overlap. Price move away and leaving this unhealthy price action over here, which is also known as imbalance or fair value gap. So we expect that one day price is coming back to mitigate this area before moving to the upside. So most of the time we are going to be looking forward for price to come back to this and mitigate them before moving to its direction. Let's move to this one. Look at what happened over here. The ABC candle price overlap, the C candle overlap, the A candle. There is no gap. That's healthy price action. That's what we want price to be doing in the forex market. Price have to balance each and every price before moving. When price leave without mitigating or balancing a price in the forex market, we anticipate that one day price will come back to mitigate them before moving to its direction. And let's move to this one, the U and then a V and then the X candle. You can see what happened over here. The X and the U does not overlap. That's unhealthy price action or imbalance or fair value gap. And you can see over here the V, the X, and then the Y. There is no gap over there. There is no gap over there. And that was a healthy price action. That's what we expect price to be doing each and every time in the forex market. You can see the X, the Y, and then the Z candle. You can see what happened over here. Price did not overlap. The Z candle low did not overlap with the X candle high. This is known as unhealthy price action or an imbalance or a fair value gap in the forex market. We anticipate price to come back one day to mitigate these areas. Okay, here is a chart. So we are going to use this price action to demonstrate the fair value gap, how you can use it in a daily time frame, because I only use it in the daily time frame more of the time to find direction in the forex market. And so this is how I use it. You can see the high of this candle and then the low of this candle, creating a fair value gap or unhealthy price action or imbalance over here. What did price do? Price came back to this fair value gap and show a bullish reaction, and we look for buy setups in the following days. So let's move to the next one. You can see what happened over here. This candle high over here, and then this candle low over here. What did price do? Price created this unhealthy price action. Price move into it. Look at the rejection over here. That's a mitigation. Price move to the upside. And look at what happened. Price moved further. Price came back, mitigated 100% before moving to the upside. And let's see what happened over here. The high of this candle and then the low of this candle. Look at what happened. Price mitigated 100% and reject to the upside. Then you have to be looking for buy setups because there is a rejection over there. Let's move to the upside. This is the healthy price movement. You can see price mitigate and balance each and every price before moving to the upside. This is how price have to be moving in the forex market. But when something like this happen, you know that price will definitely come to it to mitigate it before moving to it direction. Let's move to the upside. You can see what happened over here. Price left this imbalance over here. In the future, price might come back to it to mitigate it before the end of forex. Price will definitely come back to it. And you can see over here what happened over here. We have an imbalance over here or unhealthy price action or a fair value gap over here. What happened? Price came back to it, mitigate that area, show a bullish sign, and look at what happened. The bullish candles follow. And look at what happened over here. The high of this candle, the low, sorry, the low of this candle. Look at what happened. Price came into it, mitigated 100% and moved price to the upside. Look at what happened over here. A healthy price action. Every price is being balanced over here. So look at what happened over here. Look at this big bearish move over here. That shows the price is moving to the downside. Look at the low of this candle. And look at the high of this candle. Price move to it, mitigate this, and reject to the downside. So the next day candles, you have to be looking for sell entries to move to the downside because price shows that it is moving to the downside and price continues mitigated. You can see every price action over here is being balanced. Price move to the downside. You can see every price action is being balanced. Look at what happened over here. We have this price over here. We have the high over here. And look at what happened. Look at what happened. Price came to this fair value gap and show a rejection to the downside. And look at what this candle did. Move to the downside, taking this candle low, daily low liquidity. Took this before moving to the upside. And look at what happened over here. This one are being balanced before price moving to the upside. This is the current price action, and let's see what price is going to do. Price close above this fair value gap over here. Price is showing a bullish strength over here as well. So this is what I want to tell you guys. When you follow these rules in the forex market, it is going to help you. This is how you can use fair value gap effectively. So if you don't, make sure that you watch all the videos to understand this fair value gap. It is going to help you a lot to understand everything when it comes to fair value gap in the forex market. So I will advise you guys to watch the full video and don't forget to do me a favor by subscribing to my channel, like this video, share to every person or any of your relative that is trading forex to also watch this video to get some insight from it. Thank you guys for watching. Bless up.